Hello traders, I'm Pakkun, swing trading. I'd like to test out global Forex strategies. The strategy I'll be testing today is the one I found in YouTube related videos. This strategy can be used on both MT4 and TradingView platforms. This strategy is based on trading using range breakouts as its foundation. The person who introduced this strategy said, "It's suitable for part-time traders." He said that you could earn around $4.00 per month if things go smoothly. Let's test whether this strategy can really win. This channel aims to comprehensively test and review various techniques, logics, strategies, systems, indicators, and even dubious strategies from around the world to determine their true effectiveness. There are indeed numerous platforms such as YouTube and blogs where dubious strategies can be found. Let's expose such fraudulent strategies together. On the other hand, if this channel consistently demonstrates a high win rate, it could indicate the validity of the strategy being tested. If you have found the strategy ideas or my trading insights helpful, it would be encouraging if you could subscribe to the channel and give it a thumbs up. Your support means a lot to me. Sure, let's go ahead and introduce the dubious strategy for today. Let's proceed to test the HTF 1-hour timeframe strategy right away. This is the part of the screen here. What is the HTF 1-hour chart strategy? This strategy can be used with both TradingView and MT4. This is a strategy that utilizes the higher time frame indicator. This is a strategy where daily candlestick patterns are overlaid onto the hourly chart for trading purposes. This strategy involves identifying ranges on the hourly chart, waiting for a breakout, and aiming to capture the daily price range. Let's test if this strategy can truly be profitable. Introduction to indicators used in HTF 1-hour chart strategy. Higher time frame. What is higher time frame HTF? HTF higher time frame is an essential tool for traders to understand long-term market trends. Candlestick charts themselves visually depict price fluctuations within specific time frames. The shape of a candlestick represents the opening, closing, highest, and lowest prices of that period. Using HTF candlestick charts allows you to observe price movements over longer time frames. This refers to candlestick charts such as daily, weekly, and monthly charts. By using these time frames, you can visually comprehend longer-term trends and patterns. For instance, a daily chart displays the opening, closing, high, and low prices for a specific day. However, by observing a weekly chart, you can grasp broader market trends as it shows the opening, closing, high, and low prices for the entire week. These longer-term perspectives are crucial for traders, as they help filter out short-term noise and enable them to see the true market trends. Moreover, these trends provide valuable information to identify entry and exit points in the market. Specific use cases: identifying a trend. Using HTF candlestick charts to identify the primary market trends. Uptrend, successive higher highs and higher lows. Downtrend, successive lower lows and lower highs. Alternatively, it helps find ranges where prices are moving within a certain range. Identifying entry points. Once the trend is identified, the basic approach is to trade in the direction of that trend. In an uptrend, the entry point might be a price retracement downturn that occurs after a new high has been established. This indicates a point where there is a possibility of the price rising again. In a downtrend, the entry point might be a price rebound upturn that occurs after a new low has been established. Using HTF candlestick charts is one strategy to grasp the overall market trends and identify better trading timing. However, it's important not to rely solely on this but to also consider other market information, fundamentals such as economic data and individual risk tolerance. Related, MACD indicator strategy, testing for 183 days. Key points of the strategy. Identifying a range. Explanation of HTF 1-hour chart strategy. Time frame, 0.1-hour chart, currency pair, Forex. Setting up indicators for HTF 1-hour chart strategy. Higher time frame. Change Auto to D in the General settings. Change the Display tab of HTF Candle to Open Close. Check the box for HTF Candle Wick. Uncheck the boxes for Label, TF, Right Bar, Previous Day, Expected Price Range, and Labels. Uncheck the box for Message Panel in the Message Panel section. In the case of a buy, finding a range on the 1-hour chart. Buy when the daily HTF candles break the range at the closing price. Take profit. Close the position when the daily HTF candles close. Stop loss or cut loss. Midpoint of the range. In the case of a sell, identifying a range on the 1-hour chart. Sell when the daily HTF candles definitively break the range. At the closing price, take profit. Close the position when the daily HTF candles close. Stop loss or cut loss. Midpoint of the range. HTF 1-hour chart strategy backtest results. The testing period for this round was from January 4, 2021 to August 2, 2023, spanning 940 days, 2 years, 6 months, and 29 days. The currency pair used is USD/JPY on the 1-hour chart. Thoughts after testing. Since finding ranges requires discretionary judgment, there's a lack of reproducibility. When searching for ranges, looking for HTF doji candlesticks could potentially enhance reproducibility. It might be a good idea to include an indicator for determining ranges. Key points for identifying ranges. In Forex, it's important to be able to determine ranges. A range refers to a state where prices are moving mostly sideways. Within a certain range, what are the key points for identifying a range? Support and resistance lines. In a ranging market, prices have upper and lower boundaries. Support refers to the line where prices decline and rebound, while resistance refers to the line where prices rise and rebound. Observing volatility. In a ranging market, price fluctuations often converge within a certain range. It is characteristic for relatively low volatility to persist during this state. Using band indicators. Band indicators like Bollinger Bands and Keltner channels can help visualize ranging markets. Be cautious before and after major announcements or important events. Ranging markets often occur before and after significant economic indicators or events. Taking these points into consideration, let's identify ranging markets. Number of days, 940 days. Total trades, 30 trades. Winning trades, 14 trades. Losing trades, 16 trades. Total profit, minus 401, 4 pips. Cumulative profit, 670.6 pips. Cumulative loss, 1072 pips. Profit factor, 0.63. Win rate, 46.6%. Conclusion of HTF 1-hour chart strategy. How did it go? For those interested, try it out with various currency pairs. Also, if there are any websites, YouTube channels, or questionable methods that viewers are curious about, please let me know. I would like to test anything that seems testable. Well then, it was Pakkun.